Hey guys, I'm Tim Kotzman here with Adrian Morris. Adrian, how's it going?
It's going very, very well, Tim. Happy to be here.
Happy to have you. Do you want to start with a little bit of your Bitcoin journey and your background?
Oh, certainly. So my Bitcoin journey is half wonderment, half embarrassment, I like to say, because the first time I heard about Bitcoin was actually I want to say 2011. And I was living in St. Paul, Minnesota at the time. I was doing volunteer firefighting. I was in grad school. I was doing a bunch of different things. And a few guys I know from college actually got into it and they tried to get me into it. I thought it was a scam. I thought that they were idiots. I didn't think they knew what they were doing. So I missed the opportunity there. And about, I would say 8 months later, I had another conversation with one of them and they started explaining to me, the nuances of mining and monetary theory. And they just this particular individual is one of the smartest people I've ever met. And he went into such a level of detail on it that he won me over. And I started to really get into, what everyone says is the Bitcoin rabbit hole at that point. And the rest is history. I have learned every hard lesson there is. I've sent Bitcoin to the wrong addresses early in my days. I have sold when I shouldn't have. I have, I've been involved with altcoins and whatnot. So I've kind of gone through the entire, I guess you can say, stereotypical Bitcoiner journey that took me to Bitcoin and took me to being, essentially Bitcoin only. And of course, proxies, as we discussed. But yeah, that's my journey in a nutshell.
What's your view on why you personally invest in MicroStrategy?
So with MicroStrategy, that's also an interesting journey. I would say that when Saylor first announced back in 2020, there were some people that were instantly bullish, some people that were instantly skeptical. I was somewhere in the middle. And in 2020, we had the lockdowns, we had all the stimulus, we had, the QE was making the market just run crazy, right? Any altcoin, you basically took a dart and chucked it at a board and picked an altcoin, you can make money off of it, right? So I got caught up in that mania. And I actually owned a little bit of MicroStrategy at the time, but I sold at the end of the market cycle. That's another story for another time. What caught my interest is I actually started researching Michael Saylor himself. So I started looking into the history of MicroStrategy, and the first thing that popped up about him was that he was, a bad investor because MicroStrategy lost so much money during the dot-com bubble, right? The thing with it is everyone lost money in the dot-com bubble. Everything got wiped out. Amazon went down like 90 some odd percent. Microsoft went down. Apple went down. Like everything got wiped out. But the thing that was very, very telling was that not only was he a founder of the company, he stuck with it and he rode it all the way back up to where we were at that point and obviously to where we are now. So that initially got me more intrigued. And then I started looking at what are the nuances of what it's like to have a company with Bitcoin on its balance sheet. Back in 2021 and 2022, there wasn't a ton of conversation around it. There wasn't a lot of detail. So you were taking a lot on faith. And basically what caught me into the web of MicroStrategy, I guess you can say, in terms of, Bitcoin treasuries and having Bitcoin on the balance sheet and so on and so forth, was primarily Bitcoin itself. And then the initial conversations about, well, the multiplicative effects it can have on a stock. And of course, if I'm already a believer in Bitcoin and I think that Bitcoin is, pristine money and pristine collateral, it takes you into a natural progression where you say, well, if he has this pristine collateral on his balance sheet and Bitcoin is going to take the trajectory that we all think it's going to take, projected into the future, what's his market cap going to look like? What's his balance sheet going to look like? Can he leverage this further? And then, you see the videos of Saylor, the fact that he owns Bitcoin himself as well, and also the fact that he was a skeptic that became a believer, that all allowed me to have the confidence to get into position in 2022. And I've just been building on that position very slowly throughout 2023. And then in 2024, I got very aggressive and I built up a much larger position.
In Michael Saylor's most recent interview, part 2 of the 2-part interview, he said a few things, and I quote, "No, I think it's the opposite. I think that when Bitcoin is held by a bunch of crypto anarchists who aren't regulated entities, who don't acknowledge the government or don't acknowledge taxes or don't acknowledge reporting requirements, that increases the risk of seizure. When you have regulated public entities like BlackRock and Fidelity and State Street holding the asset, all the lawmakers and all the law enforcement arms, they're invested in those entities. There's no way that all the senators and all the congressmen are going to seize the assets from Fidelity and BlackRock or Vanguard, because that's where all of their retirement money is invested. So when Bitcoin is held by these entities, it becomes regular and normal, and people would no more think about seizing that than they think about seizing a building in the middle of Manhattan or seizing the S&P Spider assets. Why would you do that? That's just the capital that you built the country on. What's your reaction to that?
So there are a few pieces to it. Firstly, I take it back to thinking about Bitcoin as a peer-to-peer electronic cash, right? We can have several peers. There can be you and me, individuals. We can have companies. We can have state entities. We can have local entities. We can have cities. We can have countries. We can have banks, nation-state conglomerates. A peer in that network can mean a variety of things. And I think what Michael Saylor is doing right now, and it's to be expected, and I don't think it means anything negative, is that now that he is more mature in his position, one, in the market, as a player in the market, and two, with MicroStrategy as being a holder of Bitcoin, he's speaking to his peer group. If he is seen as someone that is very, very fly by the seat of their pants, someone that is not predictable, someone that would be a agent that would buck the system, that would make other institutional players less likely to want to adopt a Bitcoin standard themselves. That's the first piece. The second piece, when he says crypto anarchists, I don't think that's an insult. I think that many, many people, myself included, would be called a crypto anarchist and wouldn't think of it as anything negative, right? Because the ethos of Bitcoin is very, very much, even though this may seem controversial to say, it is a little bit anarchistic. It is upending the existing financial system for another one. That, by any measure, is anarchy, because just imagine what that transition would look like if it didn't happen in an orderly fashion. And I think Saylor is speaking to the orderly fashion piece of that puzzle. What he is saying is, if we have the Bitcoin being held by institutions that are regulated, that have laws that they have to follow, that have the cachet of existing for several decades, that are already integrated into the existing system, that legitimizes Bitcoin by proxy. If they are willing to hold it, that essentially says that Bitcoin is a legitimate asset class. That's the other piece. The final piece of the puzzle, with him speaking about, the potential implications for 6102 or things of that nature, what he is saying is, when you have Bitcoin being a now established part of the existing system, to then go in and undercut that is essentially upending one of the backbones of the financial market. He is a firm believer that Bitcoin is going to become a multi-trillion dollar asset, right? So if we project that into the future, and Bitcoin has a market cap of 20 trillion, right? That is a very, very significant part of the financial market. He is saying, logically, why would regulators then step in and say, we're going to seize it, signal to the market that they now control Bitcoin unilaterally, and then spook everyone to get out of it? They'll be undercutting themselves. They'll be undercutting the profit margins. They'll be undercutting everything. So in a very roundabout way, what he is saying is their own greed will prevent them from doing that. And the fact that Bitcoin at that point, if we have custodians that are regulated in place, that legitimizes the asset to such a point where it no longer becomes a thought that Bitcoin is with crypto anarchists. Like, I think he was actually slightly referring to FTX along those lines, with having bad custodians versus having the quote unquote good custodians like the BlackRocks, the Fidelity, and so on and so forth.
Do you want to talk a little bit about Hal Finney? Because like he said himself, actually, there is a very good reason for Bitcoin-backed banks to exist. And I won't read the whole quote because it's almost a page long. But what are your thoughts on that? It's like very timely, I think, to acknowledge that Hal Finney said that, and I'll let you.
Certainly. So a lot of and I want to say this in a way that doesn't seem like I'm judging, There are a lot of people in the space right now that actually don't know the history of Bitcoin. They understand the technology, they understand the applications of it, they understand that it is perhaps ultrasound money, but they haven't spent the time to really dig into the history of it. So the quote you're referring to was on a Bitcoin Talk forum. I think it was back in 2010, 2011, something like that. Hal Finney was essentially saying that he can see a future where Bitcoin takes off and it does everything that, at that time they thought it was going to do. Because Hal Finney was even saying that Bitcoin could be $10 million each back then, right? So he was very, very visionary. What he is saying essentially is that at that point, he can see having centralized custodians, essentially big banks, serving as the asset bearers for Bitcoin with other currencies, whether it be layer twos, whether it be stablecoins, what have you, existing as the day-to-day exchange makers, right? So Bitcoin is the base layer, the gold, essentially backing everything, and then we have assets that exist on top of it that are being exchanged person to person. And I think the quote ends something along the lines of person to person Bitcoin transactions would be as rare then as they are now. Essentially, what he is saying is he was acknowledging, in my opinion, that the base layer is slow, but that is a feature, not a bug. When you are dealing with a base layer that's supposed to essentially emulate gold, it was considered perfect money. Bitcoin is now being considered a more perfect money, a technological version of gold and an evolution of gold. Therefore, it stands to reason that you and we would have no reason to exchange that kind of currency person to person. Why would we? We would be more inclined to say we want to protect our assets, we want to protect our collateral, we want to protect our capital. Therefore, we acknowledge that the base layer is slow. We wouldn't want to use the base layer because it is slow. Therefore, banks would exist that have those transactions existing at scale. So when you think of settlement layers and whatnot going on between countries and what have you, those are the transactions that will happen on the base chain, while everyone else will be conducting transactions on the top layer. And it is very timely because you would think that Hal Finney would be on the crypto anarchist side. No, Bitcoin must remain peer-to-peer. Bitcoin must not be co-opted. What he was speaking of was evolution. He was not speaking of it being co-opted. And I think that's something that the market is really struggling with right now, understanding that institutional players were inevitable. And in some ways, institutional players may be wholesale beneficial to us long term.
Do you think without institutional adoption, we would have seen some type of hyper Bitcoinization? Or,
well, if you're going to force me to make it, if I have to be forced to make a decision, I'll come down on the side of no. Let's say for the sake of debate. Here's why. If we acknowledge that the base layer is slow, and if we acknowledge that the base layer has limitations, what that means is we are saying that a hyper Bitcoinized world would exist with a slow base layer that doesn't have a high settlement time, person to person. Okay, fine. How does a nation run on that? Do we do barter? Do we barter person to person? How do we then establish a set criteria for what exchange rates are? How do we then determine what the rates for things like rent, utilities, daily expenses? How does the individual, all 8 billion of us, interact with a currency that has those characteristics? I don't think it's practical, and in many ways, I never thought it was practical. I always thought that a hyper Bitcoinized world where everything's on a Bitcoin standard meant you have Bitcoin as the base layer, you have Bitcoin as the base currency, and then we have an exchange rate, much like we have with gold, right? So gold had a set exchange rate. I can very much envision a future where Bitcoin has a set exchange rate, because that will bring stability to the whole global market. I don't see how we have a global level of adoption where everything is existing without the institutions. At some point, an institutional player, it doesn't necessarily need to be a bank, perhaps it could be a technological institutional player of some kind. Maybe there would have still been a MicroStrategy in that kind of example that can serve as a centralized mediator, but we would need a centralized mediator to have the scale to the global level. I just can't conceive of a way that something like money exists without global levels of one, acceptance, acknowledgement, and understanding of this is what the exchange rate is. This is how we are going to exchange with it. This is what you can buy with it. You can't do that peer to peer because you and I would have a different understanding than someone else on the other side of the world.
Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. Some of the institutional adoption that we see and we talk about is viewed by many people as institutional takeover. And they have concerns. Like we hear there's some like recurring themes that we see, including like centralization, market manipulation, and kind of the erosion of some of the principles that Bitcoin was founded on. Like, how do you think through that or view that?
Well, I would say that even if we didn't have ETF approval, and let's, take BlackRock, Fidelity, all the ETFs out of the market right now, let's just imagine that, and go with what we had in 2020. We still had market manipulation then. Let's take it back further. Let's go to 2016, where we had even fewer players in the market. Without getting too conspiratorial, we absolutely had market manipulation then. And if we could take it back even further to 2012, where you had certain Bitcoin OGs that held all the Bitcoin that would dump on the market, let the price drop, and buy it right back up. We had manipulation then. The difference is who potentially can execute the manipulation. Now, on the flip side, what I would say is, now let's bring the institutions back into the mix. I think that Bitcoin going in a steady ascent into, as we would say, the moon, serves their interests. Why would BlackRock have the ETF if they wanted to only consistently manipulate the price lower? Now, we can take the argument that I just made and say, well, they want to slam the price down so they can buy up and push it back up. Okay, fine. The net result still is, I do not think they got into this market in the size that they did if they wanted their fees to stay at a certain level and never go higher. The more Bitcoin they accumulate through their clients, the higher Bitcoin goes, the higher their fees go. Ad infinitum. It just goes and goes and goes higher and higher and higher until Bitcoin achieves some kind of equilibrium, right? So I think the paranoia about BlackRock is somewhat overstated. They're going to do what institutions do, like buy over the counter and buy in tranches so they don't move the price and whatnot. But that's no different than a trader trying to get an advantageous call on his position, right? He's trying to get Bitcoin at the best price that he possibly can. BlackRock is doing the same. So I don't think that there is a great risk for manipulation from the BlackRocks. I think they're going to do things because the things that they do will come across as manipulation because they're playing at such size. I am more worried about the crypto exchanges, the Coinbases, the Krakens and whatnot. I have more concern about them long term than I do with the BlackRocks and Fidelities of the world.
And it makes sense. It's the same network with the same asset. It's just a different holder base, and not a wholly different holder base, but just have new and additional players at the table.
Well, if you think about it in terms of the peer example, right? And I like to use my father as an example for this. I've tried to explain Bitcoin to that man for 6 years now, and I got nowhere. Yeah. He understands it conceptually, but wallets and UTXOs and no, nothing. ETF, he understands that, and I got him to buy the ETF. Right now, this is the challenge that people had. And I think, again, this represents the evolution of the market. Coinbase, despite the fact that I have issues with them, and despite the fact that many have issues with them, they onboarded hundreds of thousands, if not millions of people. BlackRock, I believe, and Fidelity, I believe, will help us onboard billions of people, because you take that risk and you take that kind of, what is Bitcoin? What is it not? How do I send to a wallet address? How do I do all this? You take that out of the mix. They understand that Bitcoin is a good asset. They can now get exposure to it via BlackRock, via Fidelity, et cetera. And they're more comfortable to do it because, to Saylor's point, who do you feel more safe with? BlackRock and Fidelity or FTX? I would put money on BlackRock and Fidelity any day of the week in that kind of a scenario.
I've seen you put out a few pieces about MicroStrategy in relation to Bitcoin proxy season, or as some people refer to it, altcoin season, and you have some theories on that. If you want to jump into that.
Sure. So alt season is usually what people refer to when they say that after Bitcoin has this run up, the altcoins are going to have their run up, right? So that's Ethereum, that's all the way down. Now, the usual theory that feeds that is that as Bitcoin rises in price, there's going to be a rotation of capital from Bitcoin into the altcoins. And because the altcoins have a smaller market cap, and because they have smaller user bases, that level of capital causes disproportionately high rises in price, which causes them to temporarily outperform Bitcoin. My theory for this cycle is that the alt season, if it occurs, is going to be very muted. And I say that for a few reasons. If you look back to Bitcoin's inception and what was the ethos of its creation, it was a subprime mortgage meltdown. Then you go to 2012, 2016, 2020. The piece of the puzzle that people are missing in that is that between the subprime mortgage crash and between all the COVID stimulus, that was $6.5 trillion of stimulus. Stimulus is not liquidity, right? So stimulus creates liquidity, but what we're seeing right now in this market currently is we're going to see liquidity because of reduced interest rates. The reduced interest rates are going to encourage people to get back into the market. That is not the same as $6.5 trillion of stimulus coming into the market due to financial conditions, having all this money slushing around with people looking for ways to spend it. So that's the first piece of the puzzle. The second piece of the puzzle is in that scenario where you have liquidity coming in the form of reduced interest rates leading to people investing into the market, we now also have ETFs. So we have BlackRock, we have Fidelity, as I've said before. Where's the rotation going to come from? I believe right now, and I think there's a lot of data that backs this up, the reason why Bitcoin is hovering in the 60,000s right now is not because of retail investors. It's because of institutional players. They're the ones keeping the price where it is, where in cycles before, we would have seen a severely precipitous crash. Are we saying that they're going to rotate from the ETFs into dog with hat? Are we saying that they're going to rotate from the ETFs into, I don't know, smoking chicken fish or what have you? There may be some capital rotation, sure. I do not think it's going to be to the level that people are anticipating. That's the second piece of the puzzle. So we have liquidity versus stimulus. We have institutional players with a different user base that are not probably going to be as prone to want to rotate into these altcoins. Third piece of the puzzle. Now that we have talked through the other aspects, we now have thousands more altcoins than we did at the end of the last cycle. There's too much to be sucked up for any one altcoin or any one series of altcoins to have a run up. And it's not going to operate like people are going from Ethereum to Cardano to Solana to that. I don't think that's going to happen this time. I think we have an entirely different user base. And so that's the third piece. The fourth and final piece is that's what brings me to MicroStrategy, Semler Scientific, the other Bitcoin proxies. I am more inclined to believe that now in this market, the Bitcoin proxies are essentially going to become the altcoins of the cycle. And I say that because of, ironically, MicroStrategy. Michael Saylor has shown that a company that has Bitcoin in its balance sheet can have disproportionate returns. The market's getting wise to that. So we have MicroStrategy, we have Semler Scientific that's going to start getting into the play more in size. We have the Bitcoin miners. Now we have the other aspect with the Bitcoin miners. A lot of them are going into high performance computing and artificial intelligence. That brings another kind of investor into the play, right? The traditional markets now are being Bitcoinized, I guess you can say. There are a lot more companies with a Bitcoin on the balance sheet. People are more aware of them. They're getting more coverage. I think they are going to be more attractive than the altcoin play that someone could go in, spike the price up, slam the price down because they're playing in size, and where all the VCs essentially live, and it's a massive playground. I don't really see that cycle playing out again because of all of the things we have on this side of the equation. If we were to balance it out, BlackRock, Fidelity, MicroStrategy, Bitcoin miners on one side, all those plays, and all of the altcoins on the other side, I'm going to go with the Bitcoin-related plays, the Bitcoin-related proxies, and Bitcoin itself. I think that the outperformance is going to catch a lot of people off guard, and the underperformance is going to make a lot of people angry. And that's just my overall thesis.
How do you think about MicroStrategy versus Semler Scientific? I can only imagine that someone out there is thinking, well, MicroStrategy is like Bitcoin, and Semler, and this is, I don't agree with what I'm about to say, that Semler is like Ethereum. But from like a market cap standpoint, like, oh, well, if it's a penny and it goes to $1, like, how do you think about MicroStrategy versus Semler? And, I definitely want to point out you've interviewed Eric Semler several times, and so that's been a great amount of value and resource for us to just learn more about what they're doing.
So at a very simple level, I would say that you have the MicroStrategy, and I don't want to use the term maxis, but let's use that for simplicity, right? People that believe that MicroStrategy is the best and only Bitcoin proxy. Then you have individuals that think Semler because of things that you mentioned, smaller market cap. Proportionately, they have the opportunity to have an insane amount of Bitcoin on their balance sheet when you take their market cap into account. That does say to the market they have the potential for outperformance compared to MicroStrategy. The way I see it is Semler Scientific is a new player into the market. They are a new player into having, Bitcoin treasuries. I don't compare it to MicroStrategy. I see it as a standalone investment opportunity, much like I see a lot of the Bitcoin miners as standalone investment opportunities. And I say that because MicroStrategy is an entirely different business. They're in business intelligence. Semler Scientific is in healthcare analytics and healthcare and so forth. The Bitcoin miners, we know what they're in. To make the comparison between the three, I think is misplaced. I do think it's natural to want to do that. So I would urge people to take each investment opportunity on its own merits. Bitcoin is still going to be at the base of a lot of the price action that these opportunities see, that these proxies see. Why is it that we have to say one is going to do better than the other? Why can't we just say, if you believe that Bitcoin is a pristine asset and so on and so forth, and you believe in the value investment of Bitcoin proxies, pick your own, make your allocation, and go from there. The Bitcoin to Ethereum comparison between Semler and MicroStrategy, I have heard people say that. I think it's misplaced because, one, Ethereum and Bitcoin are nowhere near the same thing. And that's implying that Semler is somehow saying our version of the Bitcoin treasury is the way to do it, not MicroStrategy's. Or our approach or our kind of business is better suited to a Bitcoin treasury, not MicroStrategy's. I don't think that's what's going on. I think that Semler very much looks at MicroStrategy and sees something that it can emulate in some ways, and of course do things differently in other ways. So I hope there's not a lot of infighting between the two when it comes to the investment opportunity. I think that we all stand to benefit greatly from it. And Semler's success, I think, only bodes well for another Semler, another MicroStrategy down the line to come along. So we should all be, if we're Bitcoiners, I think we should be vested in the success of the miners, of Semler, of MicroStrategy, take our own positions and keep it there. Don't try to tell anyone what is the better opportunity or what is the better option.
And maybe we should note that Semler has pretty much literally come out and said, we're going to be doing the MicroStrategy playbook when it comes to Bitcoin on the balance sheet as a treasury reserve asset. So,
yes. And they can't be as aggressive yet. And I think that's what gets certain people to think that, well, are they really doing it? Are they really going to be as focused as MicroStrategy, as dedicated as MicroStrategy? But people need to take it back to 2020. MicroStrategy didn't just go all in with every potential opportunity the second they can do it, right? Michael Saylor still scaled up. And what we're seeing now is he's probably going to scale even further. I think Semler is following a similar trajectory. They need to get themselves into the market. I think they need to experience a full cycle like MicroStrategy did, so that by this time in 2027 or 2028, it's a very, very different conversation. MicroStrategy now versus MicroStrategy in 2020, come on. There's no comparison. And I think this is going to be very, very similar for Semler.
Do you want to go through a few of the aspects of Semler that are still kind of falling in place, so to speak, as far as having an options market? And there's a few factors that they've applied for something or they're working on something, and kind of to your point about you're not doing everything all at once, and it's almost like anything in life. You're not going to have, you're like, oh, wow, it's an overnight success. Well, it only took 17 years. And, this might only take a few months, but yeah, go ahead.
Yeah, I actually had this on my Twitter, all of the check marks that I need to go through. And I apologize for not knowing a lot of them off the top of my head. But so them not having an options market, I think right now they do qualify for an options market. It's just a matter of when they're going to be able to officially launch the options market. I think there's a certain criteria that they have to meet for a certain period of time before the options market can go live. But if I remember correctly, I think they've cleared that threshold, and now it's just a matter of the different players in the game, whether it be Robinhood, Morgan Stanley, whomever, to allow options on Semler. So that's the first piece of the options market. And I think a lot of people are waiting for the options market because the MicroStrategy options market, as I'm sure you know, is very hot. Most of the players in the space in the MSCR community are very, very keen on options. So that's the first piece of the puzzle. I think the other piece of the puzzle is they need 2,000 unique investors. I believe they have that. I think they needed to have a certain level of trading volume for a quarter. I think they've cleared that. And when it comes to them making like Bitcoin purchases, I believe, and Eric can get into too many details because earnings is coming up soon and they're going to be having their earnings call. It is a matter of timing right now. I think they've cleared the final hurdles from the SEC. He indicated that because of the size of his company, the SEC came back with a lot more questions than they anticipated. For MicroStrategy, on the other hand, because of the size of their company, they didn't have as many hurdles to jump through. So a lot of what we're seeing right now is Semler was navigating those hurdles. And from a timing perspective, they just kind of ran up against unfortunate timing each time. And this is me saying what I think was going on, not what Eric said with what I'm about to say. It seems like the SEC was pressuring them because they could, because of the size of Semler, because they were so small. The SEC was making them dot every I and cross every T. And my personal opinion, just based on what I see in the market and based on conversations I've had with others in the space, the SEC is somewhat bitter about how Bitcoin has gone in terms of them essentially being backed into a corner to have to approve the ETFs. And then they have to approve Ethereum. And then they have the XRP case. They've taken a series of losses. So now they're trying to throw their weight around in the best way possible. And I think Semler Scientific was the unfortunate recipient of a lot of that.
Let's talk about the power law. Yeah. Some people think we can predict the price of Bitcoin with laws or models. What's your position on that?
Okay. So the power law. Here's my first initial stance. Can we make projections into the future? Statistical projections into the future? Yes,
sure.
We can.
Okay.
We absolutely can. Certain individuals in the space are making rather grandiose claims about the power law and the kind of predictive power that it has. With that said, I'm going to throw out a few nuggets for people to consider. So, firstly, they're using a single point of data, Bitcoin price data, in the past. They are saying that it follows a power law. What is a power law? A power law is a mathematical relationship. A power law is on a logarithmic scale, and a power law is essentially saying that if you put this, let's say Bitcoin price data for simplicity, because I could have used other examples, but we put Bitcoin price data on this logarithmic scale, and the popular version now is the log scale, where you have time and price on a logarithmic scale. You then see a very, very clean progression of the price moving forward, and it stays within the corridors of this power law. Now, on first glance, that seems very profound. You're looking at it and you're seeing this data and you're saying, oh, wow, I just took this data set, I put it on this scale. This scale is very clearly moving along at this trajectory. This follows a power law. So if the trajectory follows, it stands to reason that we can predict where Bitcoin is going to sit at certain points in time. There are a few flaws with that. Here's one of them. I've heard individuals in the space say that the power law is accurate within 6 orders of magnitude. Again, on the surface, that sounds great. But 6 orders of magnitude is the difference between absolute zero, which is the coldest known temperature in the universe, and the core of our sun. So what someone is saying is, and let's use weather as an example, I'm going to give you a weather prediction for any time in the future. The catch is you might freeze instantaneously and shatter, or you might vaporize. Enjoy your day, is essentially what they're saying. That is not a prediction. That is a projection, and that is a statistical description of quantitative data. That is what it is. They are not predicting anything. They are projecting. So that's the first piece of the puzzle. To predict something, you are making a not so subtle claim that there is a deterministic relationship in the data. Otherwise, how can you predict it? You cannot predict the future without being able to say point A leads to point B, which leads to point C, which leads to point D. Okay, fine. Prove that there's a deterministic relationship with Bitcoin price data and show me how you do it. You're going to tell me that you're going to look at data in the past, so data that's already set in the past, and you're claiming that there's a deterministic relationship. Okay, what is the deterministic relationship? Can you prove that you could have predicted FTX? Can you have predicted 3 Hours Capital? Could you have predicted Terra Luna? Did you account for all of those in your price model? Did you account for the China ban in your price model? Proponents would say, yes, we did. Look, it stays within a power law. That is not answering the question. That is happenstance. That is not prediction. That is not description. That is not even description. That is them saying it fits the model. Okay, fine. Do you understand why it fits the model outside of a power law? What about the nature of the data allows you to say, we know for a fact that this data fits a power law, besides the fact that you put it on a chart, you put it in a logarithmic scale, and it fits a power law? When you really dig into the layers of this, it starts to fall apart. And then, some people that are proponents bring in things like Bitcoin follows a power law and many of its aspects follow a power law, like wallet addresses. Look at the progression of wallet addresses. They also follow a power law. Therefore, we can say that Bitcoin has several aspects that follow a power law. Okay, fine. So the question I pose to people is this. Tell me what happens if all of us send all of our Bitcoin to a single wallet address. Does the price crash? Does the price stay the same? Or better yet, how about right now, we each create 10 wallets each, and we multiply the number of wallets by a factor of 10. Does the price go up? What have you really said by saying that wallets follow a power law, except that wallets follow a power law? That's quite literally all you've said. You've said that there's an increase in the number of wallets over time, It fits into a power law. If it stays within that trend, you project that trend into the future. Okay, what have you really said? what of substance have you said in terms of prediction? And this is me being very, very general. I actually wrote like a 37-page article about this that I sent to certain people in that community that they then said was garbage, or that was written by ChatGPT. If you know of a AI model that can write a 37-page paper, please let me know. I will love to see it, because it was 20, then it was 28, then it became 37, and it was 50 at a start. So I've actually trimmed it down. I'm curious as to what you can find, but I don't know why this narrative has gotten so much steam, because it's like the stock to flow model from last cycle, or the rainbow chart model from 2015 or 2014. Everyone keeps coming out with some variation of a logarithmic scale and saying they can predict the future. You can't. And the final piece I would say is, if this model is so true and so mathematically profound and so awe-inspiring, why are they promoting it on Twitter? Shouldn't you be working for BlackRock, State Street, something along those lines? If you could predict Bitcoin's price, BlackRock would be all over that. They will come and hire you like that.
I guess the other side of that coin is, then why do you think Fidelity published Plan B's stock to flow model literally in their presentations? I mean, did they just like they needed a model and they're like, this is good for now? What are your thoughts on that?
Because it's interesting. Because it's likely to bring in investors. Because investors do like to see some idea of where things can go, which circles me back to my first point. Can we project where Bitcoin can go? Sure. We can project it, but we should say that this is a projection. I believe they did say this is a projection, not a prediction. Other people are saying prediction, mathematical truth, undeniable, the most beautiful, profound law there's ever been. That's a direct quote. Okay?
I like that.
So there's a difference there. Fidelity is not saying that, because if they did, the lawsuits would fly through the door the split second the prediction doesn't come through, right? So
yeah, it's a model. It's a model.
It's less than okay, fine. It's a model. I'll grant you that. It is a model, and it is something that you can model into the future. But that is it. It is not predictive.
Well, Plan B himself has said at some point this model will break. So it's a projection. You're trying to put your thoughts on paper. That's what a model is.
Essentially, but if you take that to its logical conclusion, what you have is people saying that we have a predictive model, but we can't predict when it's going to end. We have a predictive model, but we can't predict what will make it end. We have a predictive model, we already are telling you is going to fail at some point. Okay, so you're predicting that it's going to fail. You can't tell me when it's going to fail. Subscribe to my Patreon. Thank you.
So it's it's like a weather forecast. Like it's probably going to be right, but it's also probably going to be wrong. It just depends on which way the clouds decide to go.
Yeah, I guess you can say that. But if it is correct, when you have 6 orders of magnitude of leeway, that's the other problem with it. The ranges are cartoonishly wide. I can take almost anything, put it on a logarithmic scale, and it's going to look like a power law. So I really think that people need to take this for what it is, understand that it is a projection, understand that it is statistically sound in terms of how it projects into the future, but also understand that there are individuals in the market that have a vested interest in you believing that they know when, where, how of Bitcoin, and that they know when you should sell your Bitcoin. That is where I have a significant issue, because they're telling people, sell your Bitcoin probably at this point because of X, Y, and Z. That is not good. That I think is going to cause a lot of people to make financial decisions that they probably wouldn't have without that impetus. So I'm very, very cautious in what I say, and I'm also urging people to be very, very cautious in what they believe. A projection is not a prediction. If you want to say that if you want to use this to help you understand where things can go, absolutely do that. And there's several people in this space, in the microstrategy space, that use power laws and that say, if you take a look at the power law, it's a very, very nice mathematical trending line where you can predict what Bitcoin is going to do into the future. People put MicroStrategy stock data on the power law trend as well. That is a far cry from saying, I'm telling you, I know what Bitcoin is going to do, therefore you should listen to me and trade what I tell you to.
Do you think the space would be better served to use the word model, the power model, instead of the power law? Because if I go out into the streets and I break a law, I mean, I could be arrested for it. I mean, it has a certain amount of weight to the word law. But would it be better to just call it the power model?
So I think that the full name for the current one is the Bitcoin Power Law Model Theory, I believe is what it's called.
Okay.
And to your point, saying power law gives it a sense of gravitas, right? It gives it a sense of authority. And I think that is why. And, power laws are called power laws in the academic literature as well. But when you say something is a law, you need to understand the nomenclature. A law is like arithmetic. 2 + 2 = 4. Okay? That is not the same as saying you did 150 miles an hour and you broke a law, right? But it is natural for us to think on immediately in our minds, wait, this is a law. Therefore, it has soundness, it has validity, it has the level of cachet behind it that it should be believed. So I think for some, it would be beneficial if it was called the Bitcoin Power Law Model or the Power Law Theory of Bitcoin or something like that. It'll cause less confusion. But again, I think that is deliberate because, I've written articles for Cointelegraph. I've written articles just on my own. I've released them where, a lot of the other gripes I have with some of the current, claims about the power law is that, like Bitcoin is a physical system and so on and so on and so forth. When you really dig into this theory, this model, there are a lot of holes in it. And the challenge with it is someone like me, who has an academic background, who likes learning, who likes reading, who does this stuff for fun, would dig into this far deeper than your guy or gal that has, $10,000 to invest and they're really, banking on Bitcoin, and their own innate cognitive biases and their own innate desires will cause them to project too much hope onto this model. And when you have people throwing around that they have a PhD every other sentence, it kind of adds to that, right? So I do think it'll be better served if it wasn't called a law. But quite frankly, when I think law and I see this, I could differentiate. So I'm willing to let that one slide. But also, again, you also have other players in the market that when they're challenged about this thing, they're prone to fling out insults every other word when you challenge them. So, I just want to make sure the space is not safe, but the space is welcoming and that people are given the correct level of skepticism when they put something out. Because when I write an article and I get my DMs blown up by people saying that I'm wrong, I have to take that in stride. It annoys me, but I take it in stride. Others have created like a cadre around themselves of like-minded individuals that are projecting this thing into the space as if it's some kind of universal, undeniable truth. And that is just a far cry from saying, this is what I think, this is my theory. And I have issue with that. I really, really do.
I'm so glad we were able to do this today. Thank you for making the time. I hope we can do it.
I was happy to do it.
Hope we can do it again. Where can people find you online? And are there any resources that you use that you think would be helpful for others to be aware of? And just any closing thoughts that you have.
Sure. So you can find me on Twitter at Adrian_R_Morris. I actually don't have a very, very large social media presence. I don't really use Instagram, and I haven't used LinkedIn for many years. So Twitter is where you can find me. In terms of resources, I've done things a long way. When I got into Bitcoin, I did a lot of reading on monetary theory, a lot of reading on technology. I strongly advocate people in the space to follow the likes of like Lynn Alden when it comes to learning about monetary theory. James Van Lavish, another person that is just brilliant. There's so many people in the space that you can follow that will be excellent resources for a lot of the knowledge. And in closing thoughts, I say that to individuals in the space, understand that we're still early. And I know you hear that a lot, right? But the ups and downs of the market, if you can tolerate them, they will reward you long term. The best advice I can give to anyone, I don't care who they are, is do your own research. As cliche as that sounds, you have to do the research. You have to put in the hours. Semler says this himself. And then finally, don't be afraid to ask questions. Ask myself, ask whomever, reach out, ask questions if you're unsure, versus taking things on authority. We're all people on Twitter. You don't really know what we are and what we are about and who we are as people by our posts, right? So take everything with a grain of salt and do research on your own. And before long, you'll be able to really, really seep through and find out who's the truth and who's not, and find out what you agree with and what you don't. And you'll become, with time, a seasoned investor or just a seasoned person that knows a little bit more than they did yesterday. And that is really the best way to do it. And it served me well, and I think it will serve people well as well.
Awesome. Well, thank you again for your time, and we'll see you on Twitter.
Yes, absolutely. I was happy to be here. Thank you.